Hi everybody, I'm Sam Thompson, a local mortgage agent, and we're joined today with Joe Bladdock again, a mortgage professional.
Thanks very much, Sam. It's nice to see everybody.
And today we're actually going to be talking to you guys about the different types of income. Now, there is a lot of different types of income available depending on what your employment is, and a lot of them are calculated and considered a bit differently, right Joe?
That's right, and it's really important to make sure that your mortgage professional knows exactly what type of income you have. It's really going to make a difference on your mortgage application and your maximum mortgage amount. By your mortgage professional understanding exactly how your income is derived, we can make sure we get the maximum mortgage amount for your mortgage. So Sam, do you want to talk about the first type of income we encounter?
Sure. So the first one that we encounter, probably the most standard one, is just going to be full-time income on a salary basis. So this one is by far the easiest for us to process because it'll be, corroborated in your employment letter from your employer with the amount you make each year. This one is a very standard calculation for us to look at.
Yeah, that's right. Thanks very much, Sam. Another one would be full-time as well, but based on an hourly basis. And this would be, again, verified by your employment letter and your pay stub. And the lender would specifically, in this case, look for how many hours you are guaranteed each week as well and take that into consideration. What's another one there, Sam?
Another one is you can get with a part-time income. Again, this can work more or less the same as full-time, either if it's salaried or if it's an hourly position. Again, if anytime you're applying with an hourly position, it's very important that the employment letter states the guaranteed minimum number of hours so that the lender can accept that as employment income.
That's a good point. Yeah, we see a lot of part-time people that come across our desk, and if there's no minimum hours guaranteed, it's really hard to determine that income.
Yeah.
In that case, when you are part-time and have been employed for a little bit of time, we can look at income averaged over the past 2 years if your income is completely casual. In those cases, the lender will look at last year's income and this year's income, or the previous year's income and the previous year's income, and take an average of this to calculate your total annual income. This will give them a confident idea of what to expect on the next year.
That's right, and I think we see commission as well as bonuses that are regularly distributed each year are calculated in the same way. So we can use, especially if you were a commission or a sales position, we can use your base salary plus the commission income averaged out over those 2 years as well.
That's a great point, Sam. Thanks very much for covering that one. Moving on, we also have folks that are self-employed. Maybe you work as an independent contractor, or maybe you work as completely self-employed and run your own business under your own name. Then we'd be looking at things like tax returns. And documents you would need for those are things like T1 generals, including the Statement of Business Activities section. And you would also need things like your notices of assessments, and we would need those for the last 2 years. Sometimes the bank will ask for bank statements and a business license if required. And these are all documents to get pre-approved when you have self-employed income. Sam, would be another type of income that we could look at as well.
We do process actually quite a number of clients who are actually on contract employment. So this one, it is case to case. It requires a bit more work and a bit more explanation to the lender. So a lot of things that we look for is at least being on contract for a number of years, as well as looking at if your contract has been renewed and reviewing the current terms. So again, if you are on contract employment and are unsure if you would qualify, definitely reach out to our office and we can look at what your scenario is to see if that income would be accepted by a lender on your approval.
Yeah, that's a very specialty type of situation. So it's a case-by-case scenario. Another one would be if you are on any disability income or pension income. This usually what the lender is going to require is a letter from your pension manager, whether it is CPP or an insurance company. Or for disability, we would need a letter from either WSIB or the insurance provider, just indicating the terms of your disability payments. And we can use either the last year's income for calculating the mortgage, or we can look at the current income that is coming in based on your pension or disability letter. I think that might be all the items. Yeah. There is investment income as well, actually, as I'm thinking about that, Sam. Right. Things like rental properties, and if you also have a large amount in your bank account where it is earning an interest amount each year, we can use that income as well. And for those, we would need things like your tax returns and possibly leases and possibly account statements to look at that income further.
Right.
All right, well, thanks for joining us today, everybody. We hope that Sam and I, Joe Bladdock, have been able to give you some good insights into what types of income there are that we can use for a mortgage, and how you can better prepare yourself to make sure that you have the proper documents available for when applying for a mortgage through Sam or myself.
That's right.
All right, thanks for watching.